Good afternoon, everybody. I am Ilan Handelsman, National Sales Manager of Raintree Financial Solutions, and I'm absolutely thrilled today to be joined by Elroy Gust and Dr. Sam Mazare. Elroy and I have been working together. Elroy's been a partner of Raintree's for a long time, many years now. We've raised capital over 3 different projects for Newlook Capital. And this is one of the first appearances that Dr. Sam's made for us. So I'm going to give a little bit of an introduction to Dr. Sam, and then I'll hand over. Elroy is going to do a presentation, and then we're going to open up to a Q&A. If you take a look at the bottom of your screen, there's a little box that says Q&A. Please type in your questions, thoughts, and comments. I'll read them out as we go through and save up some for the end of the presentation. So Dr. Sam, I'm absolutely delighted to have you here on this call. You've been a general practitioner in dentistry for over 15 years. I know that you studied in Pennsylvania, and you started your practice in Kitchener, Ontario in 2007. And then you bought a practice in Brampton, Ontario in 2008 and sold it in 2012. And you started a mobile surgery business performing specialized dentistry in Ontario. And then you branched out to offer the service in Saskatchewan as well. I also know that you purchased your first clinic in Saskatchewan in 2016. And since then, you've purchased another 5 clinics in Saskatchewan and 1 in Ontario. In 2018, you joined Newlook and Elroy and started Dentallook. And we're going to explore what this is all about today, and I'm absolutely delighted. So over to you, Elroy. Thank you.
Thank you. Oh, thanks, Jordan. That was a great introduction, Ilan. Dr. Sam, I don't know if you've had such a great introduction before. Right? I just want to say Dr. Sam has been a pleasure to work with. I know he's done a lot of work around building out his head office team the last little while to make sure that there's a fully integrated team, to make sure that when we do acquire these dental clinics, that they get integrated into a platform that's fully operational right away. And Dr. Sam and his team have done a really good job around that and towards that. And that was really one of the things that we looked at when we were looking for a partner, and Dr. Sam fully satisfied that. So we can talk a little bit more about that later. I just wanted to start off with saying that we believe this is one of the only ways that retail investors in Canada can participate in a dental only investment. And at Newlook, we're pretty proud of that. And we're always seeking stable, recurring revenue, and the dental industry and the dental practices fully satisfy what we wanted to get out of it and what our investors are looking for. So I can talk a little bit about how the fund actually works. If you want to go to slide 3, I think, Jordan.
Hey, Jordan, can you just click to presentation view?
Yeah, just give me 1 moment.
Sure.
Thanks, Jordan. I realize you weren't prepared to do this. So in its most simplistic form, the dental fund is a mutual fund trust where investors actually are investing in debentures. And then the debentures, the proceeds from those debentures are used to acquire dental clinics by Dentallook. In actual fact, investors are holding debt, so debentures that are secured by the practice and the underlying assets in the practice. We don't always buy real estate. In fact, we haven't to date. Doesn't say we may not, but really the assets, the underlying assets of the debenture are, you got it, are secured by the assets of the practice, meaning furniture, fixture, client lists, and in some provinces that we operate, that hygiene revenue. So there's a lot of work, legal work around what goes into making up those assets, but they are considered secure assets, and it's in its most simple form. It's a debt product. This fund, investors pay interest, so it pays a 9% debenture, and it is classified as interest. So unlike our industrial services fund, which is return of capital, this fund, investors are taxed at an interest level. It makes a lot of sense for a registered account. And that, in its most simplest form, is the structure of the fund. It's a 5-year hold. We anticipate that it will last the full 5 years, and we'll likely have a follow-on fund, we think, after that. But it's a 5-year hold. Distributions are paid quarterly, so interest is paid quarterly. And it's a 5-year rolling hold. So it's a 5-year term from whenever the investor invests. So a little bit more about Dr. Sam, just to build on Alain's great introduction. Dr. Sam, I'll let you jump in here. So off of that, you bought your first practice in Saskatchewan, decided there was an opportunity to buy more practices in Saskatchewan. And from there, you had a few practices when we met and we decided to be partners. Tell us more about that.
Thank you. Appreciate the introduction. Thanks, Elroy. It's been really exciting to join forces with Newlook and just scaling, seeing how the practices have been, the platform have been scaling up, have been phenomenal. My background, again, I'm a general dentist, and I learned a lot by owning a practice and managing it and scaling it up and growing it. And essentially at the end of the day, dental practices is about providing equality of care and service to all your clients. And before we met with Newlook, my intention was to build a group of dental practices that are centralizedly managed, and the operation is run by a very qualified team that can actually run the day-to-day operation and work on having qualified dentists that can come and work in the practices. I joke about this sometimes, but there is an element of truth in jokes. And the idea was I wanted to build a platform that I can run from the Caribbean. Basically, I can be sitting in a vacation resort, I have my computer, and you can run it with minimal involvement from my side, because we all know that any organization that's built on one person will eventually fail because of the limitation of that person. And my idea was the fundamental thing that will help us grow and scale this platform is building a robust, strong team that is involved in the management of the day-to-day of the practices with a little bit, of course, a lot of involvement and insight and direction from myself. But what we managed over the last 3 years to do is build really a very strong head office, a support office that have all the functions that are needed to have those practices actually flourish. So we started with one practice, 2017, and as we speak today, we are in 14 different locations. We have a very healthy pipeline of practices. As we speak, we have around 4 practices that are in a matter of the next couple of weeks will be added to our platform. And the amazing thing is we have the manpower and the expertise to be able to integrate them to our platform.
No, that's a really good point, and we're going to touch on the pipeline in a bit here, but so, and Dr. Sam, just around numbers. So I think it's around 150 employees total at all the practices.
Almost with the head office is around 170, correct? 170,
okay. And then total dentists with yourself, I think is 25 or 27. Is that right?
27 dentists, correct. Yeah. Yeah.
And hygienists, there's 27, 28 hygienists.
I think there's a little bit more. There is around 32, maybe hygienists.
Oh, okay.
Yeah. There's
Good.
usually an average of 2 hygienists per practice. So yeah.
Okay.
I think it's changing every month, Elroy and Dr. Sam. So we're a little off on
every day. Yeah, every month.
I think I took your slide there, Gavin.
No, go ahead. I talk all the time.
A little bit about why we wanted to invest in dental practices. We wanted a healthcare offering. We felt strongly that our investors in Newlook would appreciate a healthcare offering just around the recession resilience of the healthcare industry. We looked at all the offerings, all the industries within the healthcare sector, and what we found was the dental industry really lent itself to the most recurring revenue. The hygiene revenue really drives the earnings of the clinic. And we saw that even during the last recession, that hygiene revenue really didn't drop away. So for us, that was really important, is making sure that recurring revenue is there. The other thing that I always recommended, or I always thought about in getting involved in the dental industry, is really, we don't have one customer. And a lot of sectors in the healthcare industry, your end customer is the government or the provincial governments. In the dental industry, that's not the case. And for me, that was important. I've been involved in a couple of other healthcare sector businesses. At the end of the day, if you're just negotiating with one customer for payment, it's not always the best position to be in. So that was the other reason that I really liked the dental industry. One of the things that we saw was that there was a consolidation that was taking place in all of the developed countries. In the US, we have seen now that corporate dentistry, or the consolidation of dental practices, is continuing to grow. I think there are around 30 or 40% of practices in the US are now corporately owned. In the UK, we saw that. They're about 13%, Australia as well. And in Canada really lagged. There's 16,000 dental clinics in Canada, and our largest competitor would have, actually I'm wrong, it's 24,000 apparently. Our largest competitor, Dental Corp, would have around 450. So in actuality, the consolidation that's taking place in the dental space in Canada just hasn't come yet, or maybe 3 or 4% of the practices are now corporately owned. So we think there's a big opportunity and there's lots of room to scale up as we go forward.
Yeah, maybe it might be a good segue here for Dr. Sam, just to talk about margins a little bit and the opportunity and pipeline that we're seeing out.
Everyone knows that there's an aging population that's close to retirement. This is where a lot of the opportunity of acquiring those practices are coming to play. So a lot of practitioners that have been in their clinic for a long time, now they are looking into an exit strategy for their practice. They're looking to what will be the next step for either retirement or slowing down or trying to exit from practice ownership. The reality is every dentist knows that there is a huge difference between being a clinician and being a business owner. It's a two full-time jobs, and we hear it time and time again, is that I finish my work at 5 and I start my next job at 5:30. I'm doing the payroll, have to think about the marketing, and the market is becoming more interesting with all the technology and the way you do online marketing and all of that. So a lot of people get to a point of fatigue, specifically around the age after 50. You get tired. You don't want to be doing 2 full-time jobs. So what we're hearing from a lot of people is, Dr. Sam, I love dentistry. Actually, dentistry is really easy for me. I've spent the first 5 years perfecting my skills. Now I have patients that actually take me seriously and I can deliver good quality care. The challenge is, what do I do when Susan calls me in the morning and she says she can't come to work for the next 2 weeks? What do I do when my hygienist cannot show up because of, and we've seen it actually specifically after COVID, a lot of practices, especially older, like more at the later stage of your career, didn't actually want to open back because of all the regulations. It's becoming more demanding to run practices day to day. And this is where we're finding the amazing opportunity for a lot of clinicians that want to, either they're like at their 60s where they want to exit, or actually we're seeing people at as young as 50 where they're saying, Sam, I love practicing dentistry. I want to practice for the next 10 years. I just don't want the headache of the management. I want to do my work. I want to come at the end of the day. I want to clock out. I want to go see my kids. I want to do my stuff that I love. And that's the stuff I feel this is where we're connecting with people, is that a lot of those clinicians are looking for ways to exit from the ownership burden. They still want to be involved in the clinical day-to-day, but they don't want to be burdened down by all these side stuff that we can actually add value to the practices by doing it on their behalf.
Good point. Yeah.
Yep. Go ahead, Gav.
No, I was going to get Jordan. I was just going to say next slide there. Like, there's so much upside in the sector here. And we often get asked the question as to why was there such a focus in one part of Canada? And we segue to Dr. Sam as to the original practice that we got. But most of the reoccurring theme that all the advisors know, and it's important for anybody else. And I've said this over and again for those people that are listening for the first time, what I'm really trying to say is we're trying to bring bank infrastructure, bank type deals to the average Canadian. So in doing this, we pride ourselves on building a moat around Newlook, our funds, our theme that we're doing, much like industrial services and our recurring revenue. The dental space is very much a recurring revenue business. So Dr. Sam, I'll segue a little bit here in regards to the practice that you acquired, the recurring revenue part of the business, the moat that we've created around ourselves in the dental space. So maybe elaborate a little bit.
Yeah, and for example, ultimately being busy in a practice is a function of how many patients can you service in a day, in a month, in a year. A lot of the practices that we have are in thriving, good communities where people are in there, and we have very minimal competition in those areas. When you look at the dental practice, your revenue eventually comes from dental services and from dental hygiene services. The dental hygiene services is a very stable, recurrent revenue that happens month to month. It's a number of patients per practice that comes on a yearly basis from 2 to 3 times for their dental cleaning. And when that happens, there's a lot of interaction with the dentist, and that's where a lot of the dentistry is being driven. The other part is we have some of our practices that are geared toward, and especially when you look at the map, the northern practices in Saskatchewan are geared toward a lot of communities that are predominantly First Nation patients, and there is a lot. These people are covered by the government insurance, which gives a wide coverage for dental services. So we find that a couple of our practices also have a focus on those areas, and it's a very stable recurrent of revenue. So we have practitioners that are invested, they are involved in these locations, and they've been that part of our team that is delivering that care and service in that area. So a lot of those practices have a very healthy number of patients that are part of the patient base, but they also have a very healthy new number of patients that comes and seek our services. We have one of our practices that sees on a monthly basis, without even any kind of form of marketing, around 80 to 90 new patients per month, compared to some practices in the city that sees maybe 7 to 10 new patients a month. And that's without any form of marketing. So a lot of those practices are very stable. They've been established in the community for a long time. People know about those practices and come for those services.
Yeah, they're not stagnant and declining. That's the
we've seen actually growth in every practice. We've seen significantly by structuring the operation a little bit more and streamlining it, and we're finding the revenues of those practices coming up.
Yeah, and this is a great chart for everybody watching, just as to how the team that we've built at Newlook and Dr. Sam has built with their back office and our automation as to just how we've grown over the last 4 years. So numbers speak volumes, right?
Absolutely. And I think if I can jump here, Gavin, is that one of the things that we've seen on the healthiness of those practices, on the rebound that we have seen after COVID, and I know we're going to talk about it later on, but that's something to also keep in mind, is that healthy recovery after a shutdown and all the extra regulations that came in, all of our practices actually recovered really in a healthy way. And actually we had some record months that we have not seen even before.
Yeah, and even with the growth in revenue or the bounce back in revenue, the EBITDA margin was actually maintained. So that wasn't like there was the extra regulations, the extra PPE that actually put a burden on the practice. They actually performed margin-wise just as well as the revenue increased, the margin increased as well. So that was really good to see.
Actually, yeah, I'll even elaborate on that, and we'll get into that too, is more so in the efficiencies that Dr. Sam, his team, our head office here, and most of you have known Sean and Abbas, the extra kind of savings that we've created in efficiencies. And again, this proves out kind of the scalability of the fund. As we buy more and buy more, our buying power increases, our efficiencies increase. We're able to add 7 to 8 new chairs moving forward in the practices, which add a phenomenal amount of revenue and EBITDA to the company, which we found organically. So what we're able to add organically instead of buying for, just again adds to that bottom line and increases our gross margin. So kudos to the team as a whole for being able to add those extra chairs to our business model. Yeah, Dr. Sam, just jump into this. Like I joke, and Dr. Sam, you're on now, so I'm going to have to take some praise here in regards to, I said, we at Newlook prided ourselves on being the industry movers and first to market on okay, COVID hit, there was a forced shutdown. Let's build out the top infrastructure so we're able from day one to ramp up, get back up, be the industry leader, whether self-proclaimed or not. Let's do it. And I want to talk about the initiatives that we took and how we had 1,900 industry professionals watching our Zoom video as to how we're going to safely reopen, what's the precedent, what are we setting as the benchmark. So this again just reiterates our numbers and what we're trying to do at Newlook.
So obviously, COVID have been something that nobody have expected in any way or form. I would say our lives have been fundamentally changed over the last 12 months. I don't know about you guys, I'm dying to travel, it's going to happen. Being optimistic with the vaccine. But when COVID happened, I think the challenge was we didn't know what we're dealing with, and we didn't know how long is the shutdown going to happen. Some people were talking July, August, we had no idea. So one of the things we've done, and that's the power of having a powerful team and well-structured team that are smart, intelligent, resourceful, and can think outside the box. And we actually had a meeting by 2 weeks after the shutdown. And the conversation was, hypothetically speaking, when we're going to open, what do we know today? How can we plan ahead of time so that when the regulation comes, we are able actually to open safely and start ramping up our productivity in the practices? And what we did is we did at least a week worth of work of thinking about different scenarios and reading and trying to see what's happening in the medical world and all of that. And we came up actually with a guideline that we thought that's going to be our guideline on how we're going to open the practices. The joke was among our group is someone leaked our guideline to the regulatory body, because what they did eventually is they actually implemented everything that we have said in that guideline, like word by word. It was actually shocking, but it shows that we have predicted things actually properly at that time. And what we did is that regulations came at the end of April. We had the document ready in the beginning of April, and we started setting up our practices so that by the time the regulation comes, we are ready actually to start. So I remember that most of dental practices were shut down. May, Saskatchewan was the first province to say, yes, you can start doing elective dentistry. And by the day we opened our practices, we are, I think, maybe the first practices in Saskatchewan that opened their doors fully equipped, not like figuring it out. So what happened is a lot of the vendors that are in the dental space paid attention to what's happening because they see we're ordering stuff. I'm like, what's going on, Sam? So, yeah, we open our practices, and says, how did you do that? So we showed them the documentations and the model, and that we got invited in around 3 or 4 different webinars where dentists all over Canada have watched our presentation to them about how did we open our practices. And I think, as Gavin said, we were like the leaders in the industry to actually share with other people how we have done it, and in a way set the stage for a lot of what happened after that. And that gave us an edge of timing because we were ready, maybe ahead of a lot of other people, but we were happy to pay back to the dental community and sharing our story. And it was actually, we have a lot of feedback that we got from doctors. Everyone's under a lot of pressure, like, how am I going to open my practice? How do I bring my team back? What do I do when this happens? And we gave them plenty of, until today, if you go to our website, on the top, there's something called COVID resources. And if you click on it, a lot of the materials that we have developed internally are on our website for a lot of people to actually utilize. And we were very proud. I was proud of our team. I was proud of our contribution. And it was really a great step forward for the team.
Yeah,
Well,
and
and really,
go ahead, Elroy, go ahead.
yeah, really, it's great to give back to the dental community, and the benefit of that to Dental and Newlook was that it really positioned us for those acquisitions coming out of COVID. And like you mentioned, Dr. Sam, there's a lot of sole practitioners that really struggled with, they're not worried about, they can't think past, how am I going to document those procedures? How are we going to put that in place? I think it made everybody pause and stop and think about the difference again of being a business owner and operator and being a good clinician and a good dentist. And I think it really positioned us for a lot of these add-on acquisitions that we're working on now. I think that really made a difference.
Yeah, and I have to add here, I'll be the devil's advocate, it's the Irish in me coming out, that we see the ramp up here and we often get, oh, it's backlog. But what we've consistently seen, and December is just a quiet month, you know, Santa comes for most people that are good. It's a bit of a quiet month and picks up again. You know, these numbers and percentages speak for themselves as to how we've ramped up and grown, and we'll continue to do so moving forward. So we see no slowdown from our side.
Awesome.
Yeah, we'll jump to the next slide.
Next slide there. So again, it's a 9% interest distribution. So it's paid quarterly, minimum investment of $10,000. Overall, for the 5 years, we're raising a target of $120 million. We're on track for that between retail and institutional support. And we're on track for that. Again, this is a great investment for an RSP registered account. It is a 5-year term. Again, 5 years from the time, it's a rolling 5 years. So 5 years from whenever an investor comes in. There is 2 1-year extensions at our discretion. And the thought process, we get asked about that, but the thought process there was, we just wanted to make sure that we would have time to deal with if we could not get one of our exit strategies to work. So we have a couple of different options or strategies for an exit. Number one, we know that at any time we can get bank debt to take out the investor debentures. We are in continual contact with banks around that even now. Number two, we are going to sell those practices at one time. And Dr. Sam can tell you this, we get approached on a regular basis by some of our larger competitors. They are active in the market and they know who we are, and we are in regular contact with them about when it's time for us to sell. So we have a couple of options when it comes time to the term of the fund and what happens at the end. I would like to think, and Gavin would like to think, that we're in this business for the long term, and I can see us doing a follow-on raise, a follow-on fund after this. So we have a lot of options at the end, and really that was the thought around the 2 extensions.
Yeah, that's great. And from the longevity part, Elroy, we as a team have 23,000 more dental practices to buy.
Yeah, that's right.
We'll be here a while, but I think it's important when we talk about alignment at Newlook for investors, advisors, and possible investors, is the stack on the debenture, Elroy. It's important to see where we rank and what prioritize.
The offering document outlines the capital stack, and really, again, investors are fully secured. Their debentures are fully secured by the assets in the practice. We do have the ability, outlined in the offering document, to borrow money up to 25% of whatever we raise from banks. That would be senior debt, so that would be senior to investors. But then ranking after our investors is $9 million in preferred equity. That is Dr. Sam's own money and Newlook's own money. That ranks behind investors. So investors get paid before Newlook and Dr. Sam's preferred investment gets paid any interest. So really it gives investors a lot of comfort that Newlook is fully aligned with our investors and that that interest is going to get paid. Those distributions are going to get made.
Right.
There is a DRIP program available. You can see the example of using a DRIP and using the compound DRIP and not using the DRIP. Gives you a great example of why you would want to use the DRIP program.
Yeah, with the 5% discount there as well on the initial issuance. Yeah, so we have the standard redemptions that are to our funds that we have right here outlined at the bottom in regards to Series A and Series B as to when you want to redeem or if you are going to redeem for any known reason. Those are our standard break fees. We'll have Jordan move across to the next slide as well. And I hopefully we bring this up at the end to make sure that people really reiterate the differences that we're trying to create, like the moat around us. So the quality of the products we're really trying to bring to retail Canadians. None of these products that we have are just as a flash in the pan. Each of ours has a theme, and like the industrial, it's a huge sector. The dental space, like we said, is 24,000 practices. We tend to be here until Elroy's gray and or we retire. So this is a product that'll be around for a long time. And that's what we try to do at Newlook. Bring these reoccurring themes, and hopefully the alignment everybody saw today and what Elroy just said in the last slide is from our no management fees, us being stacked behind the investor, us investing additional dollars into secure the operating part of the businesses. Dr. Sam, as one of our great partners, putting in a lot of his own capital, again, ranking behind unit holders, shows alignment in what we're really trying to do at Newlook with these type of funds that we're creating.
Alon, I feel like we've gone over our time. I don't know exactly how much time we had, but I think if there is questions, we're open to answer some questions.
Yeah, we're doing great. And thank you, three. I really appreciate this presentation. And thanks, Jordan, in the background, and Andrea for running the slide deck and the webinar. So Elroy, you mentioned the 9% distribution. That's a target of 9%, and that's obviously going to be paid only if the fund can afford to pay the 9%. Okay. So I'm just going to read a question that Sean asked. He understands that 2020 revenue hasn't come out yet, but would like to know the approximate number. Do we expect a drop from 2019? I think that's been touched on, but I'll let you speak to it. And then he'd like to know what the debt coverage ratio is, and more specifically, on average, the cash flow available each year for debt service. So could you maybe speak to those 2 points to start?
Yeah, revenue was impacted by I think it was 7.5 weeks that we were shut down. So for sure, there will be a drop in revenue, but we've more than caught up going forward now with, you've seen the ramp up numbers. You've seen that we've more than caught up on the revenue side. The four-wall EBITDA has increased tremendously. We are in a position, we are going to be in good shape this year and for the foreseeable future to pay those distributions. And don't forget that we were able to pay those distributions right through the pandemic and right through the ramp up. So we've really made an effort to make sure that capital was in place to pay those distributions. The debt, the ratios that you're talking about change because we're making acquisitions on a monthly basis. It's hard to pin those down, but I know that we're in good shape. The acquisitions that we're making now more than cover all of our head office costs and really puts us in a good shape to pay those going forward. And I want to say that with the acquisitions that we have planned to close by the end of May now, I guess, April, May, that we will have doubled our EBITDA from 2019.
That's a
again,
good,
really in a good spot.
Great, thank you very much. how long do dentists have to remain in the practices under the terms of the purchase agreement?
So I'll take this question. So usually it depends on obviously the deal we have. Usually the minimum term is around a year, but we have dentists that are still with us and they were the original owner. But usually within a year, a lot of those dentists are looking for an exit strategy. And that gives us enough time to allocate a doctor, find a doctor, and place them and integrate them and onboard them into the practice. Yeah, we have a couple of doctors that stayed 3 years. We have a guy that sold in 2017. He's still with us till today. So it all depends on the deal, honestly. Every practice is a little bit different. But we always give ourselves enough time to allow a smooth transition and integration of a new provider into the practice.
That also gives a segue too as to how are we different in our market spaces. Each deal that we enter into, it's a relationship, right? So there's our party asking one thing and then the dentist selling asking two different terms. So it's important that we align ourselves with what's amicable for both parties. So that's why the transition can be, like you said, 3-4 years for one dentist or 1 year for another dentist. Really depends on their needs and wants.
Great, great. Hey, can you just talk a little bit about the 5-year hold? So after 5 years, there's no redemption penalty. How does that work with the 2 1-year extensions? Would you cease offering redemptions if you employed the 2 1-year extensions?
Yeah, I think that's the premise of those extensions. The reason we would be using those extensions is that we wouldn't be able to. There was something that impeded, like maybe a pandemic, and there was no financing, that we weren't able to get bank financing to take out the investors at that point.
Yeah.
Okay. So really the 2 1-year extensions are a safety net or an insurance to protect the fund if there was a black swan event right at the time of the wind up.
That's correct.
Absolutely, absolutely. It's our intent, and because this is a long-term investment for Newlook, we're in this market continually. At the end of the day, we're simply selling our reputation. We want to make sure that we're doing all the work that we can ahead of that to make sure that we have the capital to pay those debentures. But there's eventualities that we just can't predict, and we've all seen that in the last year.
Okay, great. Can we talk about multiples for a moment? What multiple do you pay for your dental practices? And do you pay 100% cash to the dentist who's selling?
Usually. Yeah, multiples, that's a tough question. We have a range that works in our model. We haven't gone outside of that range yet. Dr. Sam, maybe you have a different view, but I hesitate to get pinned down on multiples because there might be a clinic that we can see that we would pay a bigger multiple for just because we see some upside. We haven't had to do that yet. We've been able to, keep it. I think we're still around 6 times is our multiple still. It's a tough consideration to say we won't pay more than that, because Dr. Sam, you can comment on that. There's some clinics where we can see there's a big opportunity to grow the hygiene business. We may pay more based on their current EBITDA. It doesn't mean that we're not going to be able to add value afterwards.
I think this falls under the conversation of how do we vet the practices that we actually bring to the platform from an operational point of view and from a financial point of view. And one of the considerations we have is that we're looking at the financials that they give us, but we're also looking at our financial model and benchmarking it against our Ontario or Saskatchewan practices. And we know that a practice could perform on an hourly rate with a hygiene schedule at this level and from dentistry point at this level. So we're running the practice as it is, and then we benchmark it against our practices, and then we'll either see whether we're aligned or there is potential in there. And if there is potential and there is competition to get that practice, we might go a little bit above to be able to be competitive in the market. But we've been very conservative in the multiples we've been paying. We've paid very low multiples on some practices, but I think the max we've paid so far is maybe six times, right?
Yeah. Yeah, as a blended across the whole portfolio moving forward, it is below 6.
Yeah. Great. Many of the locations are in tertiary or remote areas. What is the rationale for picking a relatively remote area compared to, say, places like Burlington, Toronto, Calgary, Oakville?
I think Dr. Sam touched on that, in that some of the more rural practices, we've actually seen better growth numbers than in the urban centers.
Yeah, it's a matter of competition too. Is we own some markets basically. Like there are some towns we are in, and we're the only dental office in there that secures a really strong patient base that is coming to the practice. There is high need areas. Some of those areas are, again, services a patient base that is covered by excellent government insurance that kind of secures the payment. When you're in a city, you have a lot of competition around. We're not against it. We're looking more and more into city practices, but that was like a very healthy place for us to start, with excellent multiples to get into the market and have a very stable base that we can build on.
Yeah, our recurring revenue part of the business that we really focus on at Newlook, these practices satisfied.
Okay, great. So I just want to remind everybody on the call, you can click on the Q&A box in the bottom and type your questions in. Sean, I just want to confirm that we've answered all of your questions. If you have any more, please type them in. The way that I understand, if I were to sum up this investment from what I've heard today and what I understand of the investment, I would sum it up as a debt structured security. And there are really two questions that each investor should be asking when investing in a debt structured security. The one is, who's ahead of me in the capital stack, being the order that people get paid in the event of a windup, and what's behind me. Because it doesn't matter how high up in the capital stack you are, if there's no equity backing it, the investment might not be worth anything. And so what I've heard you explain here is that there's 25% potentially of senior debt ahead of investors, and there's $9 million of your personal, family, friends capital behind investors in the form of equity.
Correct.
Is that a pretty accurate characterization of the investment?
That is 100% accurate, yes.
Great. We don't have any other questions floating in at the moment. I'll just do a quick wrap up here. If any other questions pop in, I'm happy to ask them. Gentlemen, it's great to see all three of you here and to be able to listen to this presentation. I'm sure it'll be viewed many times because it is being recorded. And I just want to thank each of you. Dr. Sam, I really appreciate you coming out for this.
Thank you.
Thanks a lot.
Thanks,
Great.
Elon. Thanks, everybody.
Take good care. Bye-bye.